Don't forget to subscribe to the Retire Young podcast and also leave us a review on what you want to hear next, some different topics you'd like us to cover on Apple Podcasts, iHeartRadio, and Spotify. If you're just tuning in, Al was shedding some light on retirements and retirement planning or retirement strategies, but mostly how the institution, the successful traders or investors are utilizing multiple assets. They're using options. They're using Forex. These are also available to us. The public is available to use these as well. And also, we got into some different alternatives to mutual funds. It's all about lowering fees, and that may be ETFs, which are exchange traded funds. They're traded just like a stock. It's a basket of stocks is what they are. So, and Al, as I ended that last segment, we still have a lot of listeners that want to understand more assets on different things that they can utilize in their retirement accounts, because we know the markets have three directions. They go up, they go down, they go sideways. So being able to capitalize on three directions, that could be a big difference in someone in somebody's retirement plan. Now let's cover options. Why would somebody want to utilize options in a retirement plan other than just buying a stock or a mutual fund or even ETF?
Well, a number of different benefits there with options. For one thing, a person can have an insurance policy on their portfolio using a simple option strategy. That's a huge benefit. And options really were designed as a safety type of an asset, and I think probably is the most misunderstood asset out there. But just keep it very simple. There is an option strategy that will make money, to give you profit potential if the underlying is going up in value. And there is an option strategy that will give you a profit potential if the underlying is going down in value. And what I mean by underlying, options are something that is traded on something else, a derivative. So it could be a stock. It could be an ETF that represents one of the indexes or a certain sector or industry. It could be a futures contract. But that underlying asset can either go up or down in value, and with the right asset, the right option strategy, a person can profit in either direction. So you have multi-directional potential there. You have the leverage also, and then the return potential is magnified also.
Now, Al, you mentioned leverage because we have a lot of listeners, and we have a wide range of listeners that, some people have a smaller amount of, retirement capital. Mm-hmm. Some people have a larger amount of retirement capital. Now, two questions here. One, you mentioned there's leverage in there. A lot of people think, well, I don't have a lot in my retirement. I can't do anything with it. You have that leverage, sure. So you have opportunities with that, but also, even if an investor has a decent sized portfolio, is it wise to even use the whole thing?
Well, a lot of people that have a large portfolio don't want to. They want to maintain that. There's a sense of security in having whatever that amount of money is. But you don't have to take a lot of that money to invest or to profit or participate in a market move. With a leveraged asset, a small amount of money can be used with the potential for a much greater return.
That's because the broker requires less, right?
The broker requires less. And come into these classes, we talk about this. It might seem like this isn't right, that it's maybe even illegal, but that is the way these markets function. Any individual, anyone who wants to invest has that opportunity to take advantage of leverage. Just check with whoever the broker is that you're using to find out, what's involved, and make sure you set up the right kind of account. But understand that in retirement, it used to be that retirement was comprised of three components. We kind of call it the three-legged stool. It was Social Security, it was a pension plan, and then it was your personal savings, which became your 401k or 403b. Now, most people don't have a pension plan. And Social Security is limited, but you only really have control over one of those three, and it's your personal savings. So if that's important, if that is what you have access to, if that is what can be controlled, then have the right education, the right knowledge, the right skills, and understand what the different opportunities are, the different assets that can be utilized both short-term and long term. And the proper education really should give you access to all of those, not just one asset. And that's, I think, a problem with a lot of educational sources. They only concentrate on one thing. For our students, we give them access to futures, Forex, options, stock, a variety of assets and strategies that can fit each person individually.
Al, we talk to a lot of investors and a lot of investors that have been doing this many, many years. And it seems like every one of them trade options because it's such a phenomenal opportunity that's out there. Here's another thing. A lot of people think Warren Buffett just buys stock. Buffett actually creates a lot of capital through options. And what is he telling people to do? Buy stock.
And hold,
It creates volatility, which is what you want with options trading. So, Al, the institutions, the successful investors are utilizing multiple asset classes, especially in their retirement account. And that's why these other assets are so phenomenal, because you have the buying power. You have, especially the futures in the Forex market, they're open 24 hours a day. So there's just more opportunities, but it all comes down to something that you mentioned in the third segment is choices. People want choices. And if you have more choices, that could change things. Al, I want to talk a little bit, or I should say continue this discussion on retirement, because you mentioned something that I just want to clarify and just have you dissect a little bit more, is protecting retirements. It's all about, if you don't keep what you have, you can't earn in it, or you can't gain anymore. Now, that's why it's so important for people to self-direct, because when they self-direct, they have their best interest. And I'm going to ask you a question. Who is the best steward of your money?
Well, that should be you.
Exactly. So why is it so important to self-direct, or why do we think it's important to self-direct, but also why is it so important, and how can people protect what they have?
Right. Well, again, I'll emphasize the fact that people are already self-directing in a way their 401ks or 403bs. A self-directed IRA, whether it is a traditional or a Roth, gives you opportunities to trade many different things. You get versatility there. It can be mutual funds, can be stocks, can be ETFs. It can be futures. It can be Forex. It can be options, maybe real estate, even cryptocurrencies, a number of different things that give an individual the opportunity to participate in different market directions, in different market conditions, and with the leveraged assets with a smaller amount of upfront money. In other words, you're maximizing the buying power of what you do have. And by the way, when we talk about the markets, the smallest market out there is the stock market. Yet that's what
true.
most people have access to or are using. The largest is the Forex market. We're looking at $5 trillion a day that trades in that market. And one of the important things is if somebody is going to invest in something, there has to be what we call liquidity there. In other words, if you have a position and you want to exit that position, there has to be somebody that's willing to take the other side of that position. So that liquidity gives you the confidence in knowing that there's always somebody there that will participate in an investment with you.
You're right, Al. I mean, these shows go by so fast, and we got a big show next week that I can't wait for. I feel like I wait every day to do this show for our listeners. But
patience,
exactly. I got to have a plan for this, don't I?
You do. You have a plan, and patience is a big part of having the potential for being successful as a trader or investor.
Exactly, Al. I mean, we have a lot of investors and listeners that want to understand more on how these institutions trade for income, how these institutions manage retirement, and how they create plans. And you talk a lot about these in these investing classes that you teach at the academy. We also have these investing classes online, and it all comes down to those 3 C's that we talk about every week, and we talked a lot about them here today. Is having the consistency, building that confidence. It all comes down to is making better choices. And I get it. Everybody has a different starting point. But the most important thing to do, Al, I got to have some patience for next week, but I do not have any patience. I need to hear your words of wisdom today.
Ooh, okay. Well, then I better come up with something here. You know what? Stop being afraid of what could go wrong and start being excited about what could go right. If you want to succeed, you look nowhere other than yourself. You have to take the first step. You have to make the choice that your dreams and your goals are worth an investment of your time and effort. No one can do it for you.
Here's the big thing. Don't fear failure. Be terrified of regret. Also, don't forget to subscribe to the Retire Young podcast on Apple Podcast, iHeartRadio, and Spotify. Also, make sure to leave us a review and comment on what you would like us to cover next. This is Josh and Al with the Retire Young radio show. Retire young, my friends.